Good morning. Happy Wednesday, everyone. Thank you for being with us here today. As usual, we are here every Wednesday at 10 a.m. Pacific time. Welcome to WellDoctors.us Live. My name is Andrea Le, and along with me is Dr. Stephanie Ardrey, your guide through the world of personal finance. Whether you are a seasoned investor or just starting out your journey, financial journey, this show is designed to empower you with practical tips and actionable strategies.
How
Dr.
you
Stephanie?
doing?
Good. How are you?
Good,
Um,
good.
Today we have a very special treat. A special guest who is well known in our community, and she is an executive chairwoman with First Financial Security, helping countless families, individuals, and business for the past 15 years to secure their financial wealth. And she's here with us today to share with you about premium bank finance retirement. So please give a warm welcome to Victoria Le.
Wonderful.
Hello, everybody. How are you?
Good.
It is
How are you
Hi.
today?
Thank you. I normally follow you guys on each Wednesday to listen, to hear, and I applaud you to reach out and share this with women. That's what I do for the last 15 years. And it's been, this topic is much needed, especially for professional women that we're a lot of us are lacking in the financial department. So I know Dr. Stephanie is really on top of things, and I'm great that a lot more women step up to share about this financial, because we can communicate with women easier, right? Yeah. So thank you
Absolutely.
so much for the introduction.
Oh, absolutely. Thank you so much for joining us today, Victoria. When Andrea suggested you as a guest, I was excited, looking forward to having you participate, because a lot of times people don't even understand some of the terms that we're talking about. And
Yeah.
so you can't take advantage of a strategy if you're not aware that it even exists, right? And so I
Correct.
found myself along my journey discovering that these were conversations that I was having in rooms often where there were either very few women,
Yeah.
definitely very few women of color. These were private group sessions around, billionaires talking about $1 billion,
Yeah.
ideals and ways of managing wealth. And so I'm just so grateful to have been exposed, and then also to have a community of other, qualified professionals who are bringing forth this information. So without any further ado, obviously, I'm so excited about our topic today, premium bank financing. So do you want to give a general overview, Andrea, or do you want to have Victoria kind of just summarize, what
Um,
is premium bank financing all about?
you know what, Victoria, this is her expertise. So take away what is premium bank finance retirement and how does it work? Take it away.
Yeah, thank you so much. And then you're absolutely right. A lot of time I'm meeting with my clients as well, and a lot of the women are shy away from the financial situation. And most conversations like, oh, you know what? My husband got it. I don't know much, but my husband got it. So that's the problem. And then when things happen, uh, they don't have it. They don't got it. They don't understand what's going on. And financially is what hit most. And so that is the reason why. And now we're talking about professional young women, and I've been to seminar, I've been to events where a lot of the doctors, they're in the position to help protect your health and your life. What we do is financial doctors, so we go in and communicate, and I share. So the bank finance is something when I share with our clients or our community, the first thing they say is too good to be true, and I say why. Why is it too good to be true? Just because they're not familiar with it. Everything is new. They're so unfamiliar with client. I said, look, we all have it already. If you purchase a home, the bank finance it, correct? If you
Yes.
purchase a car, the bank finance it. So the bank will check your FICO score, your financial, then they'll finance for you to enjoy that home or that house. Now, why not have the bank finance for your protection and your retirement? The wealthy people have been doing it for the longest time, but it's not public. It's not shared. So most of this are very, a very small group of people that are able to work with bank on this end. So that is where I specialize in like Andrea said. So instead of paying the premium by yourself, you can get the bank to finance it. And we've done it for so many years. And it's really fantastic. All you have to do is be open mind and sit down and give us a chance to run through the number and then explain it to you. Just like you buying a house, you put out a down payment and then the bank will finance it. And then, of course, you're going to pay the bank back. The best part about this plan is, beside the protection, is the 3-in-1 buckets of money in life. Dr. Stephanie and Dr. Andrea, it's not about retirement only, or it's not about death only. There's uncertainty in life that we don't know which things come happen first. So that is the reason why it's a one plan that provides 3 buckets of money that for you to use in whichever condition happened first. Imagine that. And the problem is not too many people are aware of that. Why? Because it's offered to the high net worth client. It's to a circle of very wealthy people that they have been leveraging and use this for the longest time. So we have been doing this for 15 years and sharing this with our community. And the more people that we're able to communicate, we share the product. And then they themselves, in return, refer a lot of their friends and family to us. Mm-hmm. So the bank finance, just like I said, is not too complicated. It's just they're not familiar with it, but it's been around forever. So what happened is you make 5 payments. For example, right, Andrea may put in max fund into your 401k every year. So you want to take a tax deduction, a tax advantage, right? So that one day when you retire, you can use that money. In this case, it's the same thing. Instead of the company match 5% or 10%, this is where you can take advantage of up to 70% matches to your policy. For example, if you set a policy to be $1 million, you don't have to pay the premium for 30 years. You can pay it for only 5 years.
Once a year for 5 years, right?
Once a year for 5 years. Imagine that. I've owned mine, pay off mine. Andrea has her also. One day we want to share that with you. But this is so wonderful, but not too many people are aware of this.
I think the opportunity is there. We have a lot of as we venture into the retirement years, we have a lot of financial worries. Is there enough fund to fund your retirement, to have a comfortable retirement, to retire with something? So that is very important. And also with the bank premium finance retirement, you have an opportunity to leverage the money and gaining 60 to 100% more than the traditional plan, right, G?
Absolutely. And the one part that a lot of people do not know, it's a tax defer on the growth. There's no risk. There's no risk on the principal. And then at the same time, it's allow you to use it with 3 situations. Untimely death. Let's just say $1 million will go out to your family without the tax consequences. The second part is, what if you run into a medical situation, a stroke, a heart attack? Remember, your income is high. You need a lot of replacement if that's something happened. If you're the head of the household, your mortgage is not going to be paid. Your medical bills will be piling up. And that's the situation that some people run into. And with a 401k or a normal traditional retirement plan will not allow them to go into a policy and withdrawals up to 90% of the policy to pay for medical bills, to pay for the missing income that you may have to endure for a year. And then on the other part that, yes.
Oh, I was going to ask in terms of what are the particular risks in terms of being able to secure a policy that allows you to utilize premium financing. When we talk about risk in terms of the age of a person, as well as the potential resources that they might have available. So what would be some triggering events? You mentioned being able to pay, for example, a premium once a year. So usually people find themselves in a situation where something has happened and they receive a large sum of money, and that's how they're able to pay that premium the first time. But it's not always, and every year, unless it is, say they're working and they receive an annual bonus. And so then they allocate that bonus. So what are some of the risks as well as some of the triggering events? Yes, for this.
Correct. You just mentioned something about the bonus as well. And I'm going to touch base on that. So like Andrea said, especially people who's working very hard right now and their income is very high, and come along with that is the missing income when you look forward to the years of retirement. And well, retirement is not like it used to be where you can have Social Security of 30,000 and it'd be enough. It will not. And longevity is another problem where we live longer, from 65 to 75 to 85 or 95, 40 years of missing income. So we're looking at, on an average, is about $1 million to 1.5 million will be something that you need to have. Now, the problem with that is that, coming back to how do you fund for this? Believe me, a lot of people are doing it right now through their 401k, through their saving account, through the investing in the stock markets. So a lot of time we sit down with our client and we review what they're already doing, and we're just shifting the money. So instead of, some will max fund in 25,000 a year into the 401k or 30,000 a year, we can do the same thing with that, using the same fund for 5 years only, and then get the bank to match it. Like the company will match it for you, then now the bank will match it, but the matching is tax advantage. You don't have to take over the tax burden from the company when they shift that match to you. So a lot of people think it's free money. It is actually taxable money. And when you ride along the roller coaster of investing for 10, 20, 30 years, you hope that you will never lose a dime. But with the stock market, you cannot predict when it will go down and when it will go back up. Some people jump off when it's up here, and then when they miss the ride. So this is something that we work with banks, we work with industry, where an index strategy may allow them to take advantage of the upside gains without the risk of the downside market. So the floor is zero. So when I say the floor is zero, a lot of people understand that no risk, no lose to your principal. And so on the other end, it's like when you sit down and analyze number, you will see many people said, I wish I knew this early on, because saving, instead of into a 401k, instead of to a Roth, instead of to your bank, you can start saving for yourself, and the bank will match up to 75% of that. And the one thing that you said earlier is that, what is the risk of not being able to get this? And I always say this to my client: 1 minute too late may be way too late, meaning your health. Right now, we still have our health. We still have our financial condition that we're able to do this. It's like buying a house, right? A lot of us say, what if I buy a house and what if I lose my job? Then there's always uncertainty, but we can make plan to change it, right? But you got to start.
What would you say? Because I always think about, my son as a young adult, and I like putting him in position for early financial strength and awareness. And so when we think about our children, being able to help them with building, wealth plans, and also while they're healthiest, making sure that we take advantage of their favorable health conditions and the longer window of compounding. So kind of what are your thoughts around when our children?
That is very wise. I started my daughter when she was 2. And going through this, we teach her about financial as well, how to save and save properly, save in a compound. So now at 15, she understands what compound is all about, right? She knows how to save, and that they do have time. So there's 2 things that we know, that is time and is investment. So the longer time they have, the smaller amount they can save. They can start save $100 a month, or we can start save for them until they can, enter college and graduate, and then now start saving. By that time, the money have already grown compound interest. Now remember, with young adult, you can start saving now, and they're very wise right now with all the social media, and fortunately my team are very young adult as well, and they can communicate and they share with the young people, where instead of going crazy, save those money now. Put the money to work for you, and like you said, educate the young kids that this is the way to go. If you don't want to work forever, then you can start saving now into the right vehicle, and that you can grow compound interest, no risk, no restriction, no limit of what you can put in, and that it allow you to use it 3 ways. We all need it. The untimely death, it will pay out without the tax consequences. The living benefits that we all need, in case of long-term care, in case of terminal stroke, heart attacks, we will need that. And then the third part is one day we're going to want to enjoy this journey of not being able to work anymore. Now we can stop working and be able to replace 60 to 7% of the income that we're missing and do it without the tax consequences.
I think the most wonderful about the premium bank finance, you have touched base a lot of information earlier. The most important thing is a lot of people worry about how's the loan work. Do I need good credit to qualify for this? Is there a loan document? Is there a personal guarantee or interest payment that I have to make? Things like that. People think on the back of their mind. What's your thoughts on those?
It's natural. It's natural for people to think that because we're conditioned to know that when you go out to the bank and borrow money, of course, the bank's going to tie something to that. And so with most situation like a mortgage, I'm going to compare it to a mortgage. You make a down payment and then you borrow money, you pay monthly to that mortgage, to that house, right? So with this, the benefits of this is the bank is going to hang on to the collateral, meaning the title of the policy. So inside of this policy, you have an index universal life policy, a policy that allow you to have the three vehicle, like I mentioned earlier. Let's just pretend it's $1 million. So the title is placed in a trust, and it's the easiest way to qualify. They don't even check your FICO score. They don't even need to check your background.
Right. I think that's nice.
It is. It's interesting when you sit down and I can get approved just as long as your health is approved, the bank will finance it because the bank is hanging on to the title of this collateral, meaning $1 million inside of your policy, right? If something happened, the bank will say, hang on, let me take the money out that I lent you, and then it's deducted from the debt benefit. The rest of it go to your family, and then you don't have to pay anymore. But as you continue to pay the premium for 5 years only, the bank will match it the first 5 years because there's a lot of cash that built up inside of this policy that the bank do not need for your payment to their loan for the first 15 years. They will continue to build up the cash inside of this policy. Then at year 15, when all of this cash from the bank and from your premium compound for 15 years, remember the magic word that I just used is compound interest. Right. Remember, if you go out to borrow money to buy a house, for example, $500,000, imagine you paying 3% compound for 30 years. You did not pay $500,000. You probably paid $1.5 million
a lot more.
Enjoy at home, right? In reverse. Now, here's a little bit twist for you to see, and that's the reason why people go, it's too good to be true. If the bank is funding this money for you and they say you don't have to pay back, the bank and your premium will continue this journey of compound interest annually. They'll send you a report annually to share with you what your interest earn. For example, my policy, my first year, the interest we earn is 15.5%. Now, the part that we borrow from the bank, that part, 3.5 belong to the bank. So remember, if my return is 12.5 and 3.5 belong to the bank, didn't I spread a 9% extra? Yeah. So I borrow the bank money. But the money that I borrow from them, I'm earning the spread on the extra money. Imagine compound that for 15 years. Now, of course, on the other hand, during the year 2020, when the COVID hit, stock market went down, right?
Yeah.
This is the reason why banks have no fear of lending the money to us, because we're not using the money to invest directly into the stock market. The bank only allow us to pick and choose company that only offer index strategy, meaning this. The market may return that year 15%, but there's a ceiling of what we can earn. So that ceiling for that year is 12.5. So I've credit 12.5 for my policy. And the portion for the bank that I use the money, 3.5% of it belong to the bank. The best part is I'm not paying them right away. We continue on this journey, compound interest. And then for the next year, the market returned 9%. The bank portion of it, 4%. there's still a spread of 5%. So as you can see, the 2-year spread is already 14% compound spread. Then 2020 hit, the market went down negative. I earn nothing, I lose nothing. The floor is zero. That's the magic words. So as we look through history, we got to go through stress tests, and the bank did a fantastic job of looking through 10 years, 20 years, 30 years. And as you can see, the stock market cannot drop for 30 years straight, or it cannot drop for 15 years straight. It's a roller coaster. So it's a cycle. Every 8-9 years up, 1 year may drop, like 2020, 2021, and then it went back up really fast. And in 2008, 2009. So we will encounter a few really bad years, but the best part is there's no negative years. You can put a yes.
Yeah,
So
I was just saying that I think that the timing is also when you understand just the typical cyclical factors. This morning Bloomberg was reporting that the markets were down and rebounding, but also as we are nearing an election year, that always changes the political climate because there's a lot of anticipation. So there's pent up, capital on the sidelines in some cases, and then there's capital that's being put in the market actively, riding the wave of what can possibly happen. And usually following an election year, we tend to have more of a bull cycle. You see the rebound in the economy, at least going into that first year post-election. After that is then when we begin to realize if there's going to be, a bear market and all of those things. But all of those things are cyclical. And so when we think about those triggering events, sounds like what you're saying is, this would be a really great time to look at this option, because what we can see for the next at least 12 to maybe even 24 months is the strong probability for growth is there. So especially if you need to catch up, right?
Yes. And here's another thing you have to look into, right? A combination of what makes this really strong and perfect. Number one, the bank is financing it for you. Number two, you're using compound interest. Number three, there's no risk into the strategy where you use an index strategy where you can participate in the gains annually without the risk of the stock market. So you avoid the risk of losing money. Number three, there's a tax advantage tied to this, where everything you grow is like a Roth alternative. So a lot of the high income earners cannot open a Roth. There's no limit to what you can contribute. There's no restriction of when you can take it out. Besides, we have to wait into the bank take exit. So there's so many vehicles, there's so many features that make this plan really perfect. But the problem is not too many people are aware of it. So that's why we want to share with as many people as possible, especially women, because we will need the income replacement that and the longevity this plan will help for that as well.
But can we also, I always look for tools that I can use in a business application as well. And I would think that we'd be able to use this for our business purposes, because oftentimes I use insurance like for key man policies.
Absolutely.
I also believe in funding what I call a just in case we have litigation policy,
Absolutely.
If we don't have litigation, great. We have some extra money over here. But if we have litigation, again, having been in business, when I think about some of the risks that tend to arise along the journey, it's like in a household, in a business, if you have a key leader in your organization and something happens to them, then there certainly is a need for resources and time to rebound from the loss of that talent and to be able to appropriately replace that talent. But also, the other things that can happen in business, kind of, hedging a bet if unfortunately you find yourself facing litigation. Oftentimes people think it's easy just to grab cash from operations, but that can be a crippling blow to your organization, especially if you find yourself in a cycle where cash from operations might not be sufficient to take out a lump sum to retain a law firm, right? So these are kind of things that I've thought about and I've experienced, the benefit of just in case in a business scenario. So
you are absolutely correct, because you have both the business side and you have the financial side, and you have to prepare ahead of time. So that is great, because when you're in a business, so now we're talking about taxes and business, that's my specialty as well. I have clients that's paying $1 million a year in their business, and I'm able to take it down to where they can shelter that and put it toward their retirement planning. And when you talk about business, key person, executive person, you got to protect them to protect your business. And doing it with tax advantage, where you can take the tax advantage from the business, allow you those tax ID for you to use that, but most don't know. The problem going back to is we rely on our CPA, but CPA may help you expense out the business, but they may not have the license to do this strategy, the planning part ahead of time. So that's where we can come in and help as well, using the bonus or using the business. And if you have a C corp, it's even better. So to go into there is a whole different a day, because there's a lot of things inside of it that most people miss out. Like you said earlier, doing a business. Remember this bank finance is inside of a trust. Now it protects you from creditor as well. So everything you build, the more your wealth grows, you gotta protect it inside of a trust. And this is exactly what it is. Some people go through a life where they build a business, they're very successful, they lose it all, and then they have to start all over again with nothing. Well, when you plan for this already and you pack in a lot of money inside of a cash policy, you can use this. You can use this, like you said,
an asset, right?
An asset. It's not a liability. Remember, a home you bought is a liability. You still owe money. This is an asset right away. Let's just say for a client who said, I purchased a policy for 1 or 2 years, and what if something happened? You don't have to pay the premium anymore. Now the money is coming out. So this is so many things that an individual have to sit down and you have to grow through it to explain, because there's a lot of details and we want to make sure they're clear. And then we set up this plan. And this is the reason why Dr. Andrea came and met with me when we first met, right? Because she was inquiring about this and she heard about it and she wasn't sure if it's right. And then now she owns a policy. She thinks like, why not too many people know about this thing?
This is a great plan for individuals and also business. You can utilize this to for tax purpose, and also retain talents and for business perspective. There's so much thing that you can do with premium bank finance, and so is personal
and
too.
The business can fund for it, and the business can protect the key person. Right. And imagine 5 payments. You can also borrow from the business. So you know how when you take the money out from the business, it's not taxable. There's so many really, really good features, but it has to be a one-on-one. So we understand what it is that you need. We can look at what you have already and maybe just shift money around. Because a lot of time we do a 30,000 in a SEP IRA. Well, what if you do a 30,000 in this plan, that you get $1 million or $1.5 million down the road to use it without tax? So it's tax now or tax later. So there's so many things, but to fit one individual, we have to understand more about their financial situation. Each family, each household, completely strategy. It's completely different.
Absolutely. I mean, Victoria, this is a conversation that we could have part 1, part 2, part 3.
Correct. It's exciting. I have seminar for women, and because a lot of time when they sit down, they say, wow, Victoria, you know what? I've been focusing on doing what I do best, is to heal people and to help them get better. But I've forgotten about the financial situation, because one day when I'm no longer able to work, I don't know how I'm going to continue on this lifestyle, because remember, we're not about the 20,000 or 2,000 a month from Social Security. We need many tools. We need many sources of income replacement, especially now with inflation. From here to 10 to 15 years down the road, the income right now, we need to replace a lot more. So the question is, do you want to replace it with taxable income or without the taxable income?
Absolutely. Right? Absolutely. And, just to kind of piggyback on a statement that you made earlier, is a lot of time people lean into, their CPA is just for one part of their solution. What I'm finding is a lot of times people really need to even expand that bench, because they're not using a CPA, or their CPA is not acting as a CFO. Again, especially if it is they have business. So what they really are doing is just basic bookkeeping. And that really is not sufficient, because basic bookkeeping bookkeeping is looking at your data after the fact,
Yes.
as opposed to projecting what your future could entail and
Um,
preparing. So there's a difference
before,
in that. You know, if you're
you're
looking
correct.
in the rearview mirror, you're only going to see it after the fact. You cannot properly plan for, make adjustments. You know, what
Yes.
other people do is they plan for. So if I
Yeah.
know that I'm going to have a significant year, for example, where maybe I am in a career where my income sort of fluctuates. You know, I may
Yeah.
get additional contracts and I find myself in a higher tax bracket. And as a result of that, if I don't have something else that offsets that tax,
Yeah.
then I'm going to pay a higher base. I don't want
Absolutely.
to know, I don't want to discover that at the time that we're preparing my tax returns. Like
It's
I
kind of
need
late,
to know
right?
that before so that I could have made some
You know,
decisions.
you're absolutely correct. The reason is before I got into this business 15 years ago, we're in a lot of businesses in real estate and in mortgage and all of that, and we rely on the CPA. And I got upset because now that I'm in the business, I go, wait a minute, how come my CPA did not tell me about this, that 412E, the SEP IRA that I can set up? But then I come back and I say, wait a minute, their position is to expense out, and they didn't have the license to do that. So I
Sure.
realized, I said, wait a minute, then I have to look for someone else to help me set up the defined benefit plan, the qualified plan, that they're not in the position to do so, right?
Mhm.
So that is the reason why it's up to you as an individual, as a business owner, to look to after the tax, or like you said, if you know it ahead of time that you may have a really good year, you got to plan ahead, because a lot of this stuff, it takes a long time to put together. We need
Sure.
census form. We need to go through the qualifications and follow the guideline where we don't get audited by the IRS. So
Mhm.
there's a lot of steps that we have to take, and it's worth it, because if we can save 100,000 or 200,000 for your business, wouldn't you rather spend some time looking at that than work harder for a year and not even earn that much?
Absolutely, absolutely. If I can get every dollar to do the work
Yes.
for about $10 and I can preserve some of that, that's the plan that I want to execute. Well, believe it or not, ladies, we have come up to the top of our time. And as I knew it would be such a dynamic opportunity and conversation, Victoria, you have to promise that you'll come back. We're going to have a
We
follow-up
have
to
to do
this.
part 2 on this one,
Let's do
right?
part 2 on this one,
I
okay?
will try my best. I love the conversation, and like I said, a lot of time, women are not comfortable discussing this with like about their finance, and sometimes they're embarrassed too. And I recently get a lot of calls, and especially from women at their 69 and 70. And when I'm on the radio, they said, Victoria, can you help me get more money? Because I don't have any money. I say, it's way too late. You're already at 80. There's nothing I can do at this point, and I wish I can go back in time to help. So we want to reach out to as many women, as many family as possible. We say women, but I know anybody who reach out to us will help, anyway. So thank you so much for having me on your show. I wish I can add more value to each and every individual who listen. And please do not hesitate to reach out to Andrea, reach out to somebody, and let us know how we can help you. Absolutely no fee for consultation, just
It
more
is free,
information for you,
always.
right? So that
Absolutely.
when you can add on more wealth to your family for the next generation, that's our purpose, is to add more value to you and your family.
Thank you so much, Victoria, for being with us here today. And, it's a great topic. It's packed with so much information for you to learn. And if you
Yeah.
have any question at all, please email us at welldoctors.us, info@welldoctors.us. We will have more, probably part 2 about this one, and 100% bank finance strategies for
Oh,
high net worth individual, right, Victoria? So
wait
there's
till
so
you hear
much
the
more.
100% bank finance.
Oh
The
my
So
100,
goodness.
yes.
let me share a little bit of it. The bank finance that we mentioned earlier is like up to 60-75%, where you put in 5 years contribution, 5 equal years. The bank finance 100% is for the high net worth clients, where estate taxes is their main concern, where their wealth right now is 10 to 15 to 20 million dollars. Okay, so with that, the bank come in and finance 100%. So there's collateral and all of that. There's a lot of details, but we can do it.
We can go more into details about that in the
Yeah,
next part 2, hopefully.
it never
And as
stops.
usual, thank you
Absolutely.
so
I've
much
been
for
on the
taking the
receiving
time.
end of some of those structures. So those are fun premium policies to put together
Yes.
for, I've
Yes.
done a few of those. So yes,
Good.
absolutely.
Good.
Well, thank you so much for tuning in and be with us today. And we are here every Wednesday at 10 a.m. Pacific time. Please join us weekly. Until then, we encourage you to take care of yourself and your loved ones, and by creating a plan to protect you and your family. If you already have a plan in place, please review and update it to make sure it is the best for you. If not, reach out to us and we can guide you through this whole process. Thank you. Have the most
Take
wonderful
care,
day.
everyone. Okay.
Thank you. Take care, everybody. Have a wonderful day.
Bye.